Undeposited funds is the imaginary wallet, purse, where money is kept until it goes to the bank. A lot of us are still accepting paper checks, which is just fine. And so what happens is client one gives us a check. We show that the invoice is paid, and the money hangs out in undeposited funds. And then the next client pays us, and that check goes into this lovely purse waiting to go to the bank. And then maybe a third client pays us. And then when we go to the bank, the deposit we make is all three together. And in QuickBooks, if we take 3 checks to the bank and they get deposited, let's say they total $10,000, we want your bookkeeping to also show that $10,000 was deposited and that it was these payments. Unfortunately, what's going on with the bank feed is people are skipping a lot of the important components of bookkeeping that should exist, like paying attention to accounts receivable. This is the money we told clients they owed us. This is the money we've actually received from clients, and these are the people that are past due. If all we're doing is recording the deposits from the bank feed, we're not documenting who paid us and who did not. Double on top of that, a lot of people are still actually processing invoices and might be even receiving payments, but they're leaving all the money in undeposited funds and not actually recording the deposit in the accounting system. And so then they've got stuff doubled up. They've got on one side the invoice payments that are showing up as income, and on the other side they've got these bank feed deposits that are showing up as income, and so we end up with twice as much income as we should have. What is undeposited funds? Well, it's the electronic drawer, purse, or bag where you keep the checks until you go to the bank. Now you might be saying to yourself, Jackie, that's so old-fashioned. Who even uses paper anymore? Well, let me tell you this. There's also payment pass-through. Have you ever had a payment pass-through account? Those accounts are set up because we're using merchant services, and the money that we receive from Visa, MasterCard, American Express doesn't arrive at the bank until 3 to 5 days later. And so what we do in that case is mark the invoice as paid. It hangs out in payment pass-through, much like undeposited funds, waiting to actually be shown that it's going to the bank. Payment pass-through is a way of having undeposited funds for your electronic payment. And that usually is the case for people that are accepting credit cards, like restaurants and places like that might not even actually have invoicings. They have daily sales, and the daily total sales plop into payment pass-through, and then 2 to 5 days later we actually see the money flowing. Whether you're using payment pass-through or undeposited funds, make sure those accounts stay clean and accurate, and don't leave zombie transactions laying around in there for months or years. If you found this information useful, like the video, subscribe to our channel, and share this with all of your friends.